Welcome back everyone. This is our weekly update on the gold market. Gold's price moved higher in the latest daily sessions after a very strong previous week for the sellers. Even so, gold's price has been able to keep above the lowest level reached in the past months and since its all-time high price back in August, which could imply traders could be patient and waiting for the right news to take action. This report aims to identify and detail the most important subjects possibly moving gold's price. At the end, our technical analysis will assist us with an in-depth view of the most recent price activity for gold. Starting first with updates on the measures brought forward to deal with the pandemic. In the US, vaccination continues to roll out swiftly as the Biden administration has made the matter a priority and of crucial importance. Various sources stated that 100 million vaccinations are targeted for the first 100 days, while weekly vaccine supply is also increasing. The world is mostly interested in the public's health, yet gold traders, on the contrary, are looking for openings to place orders. As long as the pandemic continues to affect credit use, job creation, and limit consumer confidence, gold's price may continue to remain at rather high levels as it managed to do so in the past months. Even though on the surface the situation seems to be somewhat improving and the US Federal Reserve seems to be more optimistic about the economy for the future months, gold's recent move lower does not reflect reduced economic risk or a guaranteed economic rebound. We would advise traders to approach gold's price with extreme care and focus when placing orders. In the US, a swarm of headlines regarding the new fiscal stimulus package have taken over the news. Even though the market is currently counting on a new rather large stimulus $1.9 trillion package, some recent data could be very interesting for gold's further activity. According to the Congressional Budget Office, the US federal budget deficit widened sharply last month. A report by the Wall Street Journal said the monthly deficit widened to an estimate of $165 billion in January compared to $33 billion in January 2020 and $144 billion in December, the CBO estimated in the past days. Market participants may not be paying attention to this kind of news, yet the overall effect of the happening could be increasing economic risk in the long term. Gold's price could continue to be on the rise as the US economy's risk tolerance continues to be on the decline in our point of view. In the past week, the greenback's movement higher sent gold prices lower, confirming a strong negative correlation between the two instruments. We could say that the relationship between the US dollar and gold's price may be similar in the following sessions. In the next days, some important US financial data to be released could be of interest to gold traders as they could move the yellow metals price upon release. On the 10th of February, we get the US inflation data for January. On the 11th of February, we get the weekly initial jobless claims. And on the 12th of February, we get the preliminary University of Michigan sentiment for February. All to be released in the US session, so caution is advised. Moving now to our technical analysis. Please note this is gold's 4-hour chart. Please note we have not changed our levels since the past report as the recent trading activity seems to confirm the levels are accurate. At the moment, gold has managed to gain notable ascendance and is currently trading above the S1 1835 support level and heading towards the R1 1855 resistance line. A breach above the R1 level can possibly send gold's price to test the R2 1875 hurdle, which was tested twice in January on the 21st and the 29th. In case of a strong bullish market reaction, gold could even be lifted to the R3 1900 round number level, which will also confirm the bulls have dominated the scene. On the contrary, a move lower could send the price activity nearby the S1 1835 support level, while a continuous sell-off could push the price even lower to the S2 1810 support barrier. A clear breach below the S2 could signal the price activity is possibly moving towards the S3 1785 level, as was the case on the 4th of February. From a long-term view, the precious metal remains in a downward trend, while in a more short-term view, Its latest upward momentum points at a sideways motion. Most of the price action since the 11th of January has been between the R2 1875 hurdle and the S2 1810 support barrier, making them both relevant and considerable. The RSI indicator below our chart is now approaching the 70 level, confirming the recent increase in buying orders. That's the end of this report. We hope you found it interesting and useful. If you liked this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.